today, I'm down over $34,000 day trading, taking this one trade, which stopped me out in the market. Recently, we've been thriving, but today we took a loss, and it's obviously always important to be transparent. This was the trade right here. It was a 5-minute BPR violation short, which we looked for and saw invalidation off of. But before we do that, before I explain the trade, let's get into exactly how I determined my bias, why I determined price was good enough to trade, and what we could have done better through our execution. So to start off, looking at higher time frames, what we were able to get a gauge of was price through ES and NQ. One of the most important things in the market to look at are the highs and lows that we put in through higher time frame. Well, if you look at the highs and lows that we put in, specifically all-time highs on NQ, you could see that there was highs created on June 1st, which we had seen price on NQ come up and take out. But however, on ES, we had seen price essentially come up, tease the high, not take the high, and see a push back down. So you see a SMT occurrence here through price. Oops, marked it out wrong. This is the right high. You see an SMT occurrence with ES not taking out its all-time highs off the June 1st high, but you see NQ do that. So you have bearish SMT created in the market, again, as NQ creates a higher high and ES creates a lower high. From there, that was one of our key aspects in terms of our bias today. From there on out as well, a great way to get a gauge behind what the markets want to do is always price action. And price action trumps all. And so for me specifically, coming into the PM session, which I avoided the AM session, I was sick this morning, skipped it, came and traded the PM session, we had seen a very large AM sell. If we dumb it down here, go to the 15-minute time frame, right, and we're able to look at price, what you can see is we see a little large, tremendous sell, and you see the combination of overnight price alongside New York trade relatively bearish. You initially are met with an Asia sell here off the open. We do see price chop for the most part, but London sold off slowly but surely, and New York simply extended that. So utilizing the opening range move and also identifying the bearish SMT that we had off all-time highs, we were already lining up for a bearish bias. I will say, had I traded the morning, there definitely probably would have been a better opportunity. The unfortunate thing here with price was that price was not the best at all today through AM and through the PM session. Let me explain. Well, if you look at the open here, as you guys know with the opening range move and what we use, that is called the RM, right? The RM is essentially where you wait for the first move of liquidity after New York open, typically an overnight high or low. So for today's example, we would be using London lows because it's the first area, right, that we end up taking out in terms of liquidity. But here's the thing. Off the open, we come down here and we take out that low, but we don't offer an entry model to play into that bearish bias. So although I did not trade the morning, the probability of me missing out and not taking the trade was very likely because the opening range move occurred. And if you were short bias, like I was in reference today PM, even off the AM, there was not an entry. The only retracement candle that we had off the open was this 9:38 AM 1-minute candle. Aside from that, it was straight sell. All red candles, all black candles, and you end up seeing price come down more and more and more. And that was by far the biggest move of the day. We do end up seeing a beautiful after-hours session dump, but obviously we don't trade after hours. We end up seeing price come down, and we see a good move from there. What I was simply looking for was clarity and price to continue down lower. Again, the unfortunate thing was that price was not the best. A great way to always get an indication of price is look at the time it takes to see the certain moves that we see. So for example, off the open through here, down into the low created here, we end up seeing specifically from the high down to this low on ES. Within about 15 minutes of trading, we end up seeing about a 35-point sell sequence on ES. However, if you compare this swing high down to this relative low, we end up seeing a 36-point move within what? What would that be? 1040 down to 1245 in 2 hours. So we see equally the same move in terms of points in 2 hours here as opposed to 15 minutes here. So you see the volatility, and more precisely, you see price and its eagerness and want and lower be a lot more higher here and significant here rather than here. So I would say in the morning, if I was live, there was probably a good chance I don't take a trade, but the bias would have panned out. Now coming into the PM session, my bias was still lower. Although we were very consolidative, I felt had we seen price pick up and seen a good, tremendous sell sequence here coming down and confirming off this trade that we end up taking, that we could see price potentially trade lower. Here's the thing. We've done a great job in the past couple weeks being very patient. Last week, we only traded 2 out of the 5 trading days, closed out for over a 5R in the week. Coming into today, we were up a 4R in the week. Now we're up around a plus 3R because we took a minus 1R hit today. But what we were doing up until today, the past couple weeks, is we've been very patient. What I mean by that is we recognize price when it's not the best, as we just discussed, in that it's moving a lot slower through a longer amount of time. You see price trade very up and down. And for me, I still came into this with the potential of taking a short in mind. I will say this. The entry model was not the worst. We've taken these setups quite often the past couple weeks. If you guys have been watching live reviews as well, where I post on YouTube, or you're in the Discord, we end up taking a lot of BPR violation entries. However, as we've talked about, BPR violation entries, the entry model precisely is not just the entire trade. It's not like you see a violation of a gap and boom, you immediately take a trade just because we violated it. No, we have all our components and we can see that price was clearly not the best. The idea with this trade, again, was a 5-minute bullish BPR violation, which is a balanced price range. You have a bearish fair value gap and a bullish fair value gap, which turns into a bearish inversion fair value gap, right? So what we're looking for here, excuse me, said that wrong. You have a bearish gap, which turns into a bullish inversion fair value gap, and then you have a bullish 5-minute gap. So this is a bullish BPR. We end up coming down here on the 1-minute time frame. We do end up seeing price close under with utilizing our confirmation. Our confirmation entry was at 1:18 p.m. Eastern Standard Time, and you see me mentioned via text, I am short to my community. I'm also obviously executing this via live stream. We end up taking this trade, and we end up seeing price essentially go into drawdown right away, where we eventually came down and traded past that relative high. I will say, I guess the unfortunate thing here with price is that we still end up seeing validation in our take profit interest. Our take profit interest in this trade was this 4-hour FEG fill, as I've mentioned in the commentary piece here. And we do end up seeing that low get taken out, right? That level in 75.44, we do end up taking that area of interest. However, we end up seeing price chop and consolidate for the most part before seeing that move. So Lanto, on any given day the past couple weeks, although he has his bearish bias and believes that we can see lower, he's still not taking a trade here because he recognizes how slow and how bad price action is. And today is a great example moving forward that we could use that chat. No matter what, even if you have the right bias, which is what we did in hindsight, we had the right bias as we traded lower and saw targets get hit. Timing's very important. And the biggest indication of timing is price action. And when price action is not trading the best, it's not a good indication that you're going to be able to time and have high probability. That was the case here, right? We took a trade in conditions which were good. We should have ideally sat out and not taken a trade. That was best case scenario. So that's pretty much it for the short. We do end up taking a long furthermore going on after recognizing we ended up seeing some SMT off the low. We had bullish SMT off low of day where we had seen NQ create a higher low and we had seen ES create a lower low right here. We ended up taking a scalp idea. This is primarily just a scalp. I'm not expecting a full-on reversal in the market, but I'm expecting a scalp idea where we ended up taking a 5-minute bullish for rally gap retracement, tap, and entry. Now, when I tell you guys, this is probably one of my most annoying trades I've held in quite some time. It was very annoying. This is probably the first time we've had to hold a trade like this for this long in consolidation, probably since Q1 this year. And so we ended up taking this trade, and this is another good indication of why it's important to recognize price, and no matter what, just because you see a violation of a gap or just because you have a set bias, if price is not following through and it's not there for you, price trumps all, right? You're not going to make money. And so for today, we have that short, which ends up just consolidating. Price consolidates back, up higher, and then sees that move lower, hard to time. And then you have this here as well, which we end up taking along. We see price end up trading back higher. I'm not going to hate this trade. I'm not going to, punch myself over it. But here's the thing: is on a day like today, you ideally be patient, and the best case scenario, you just don't end up taking a trade. In my eyes, very low probability in terms of timing. Again, you can have the right bias, but when price is bad, it's very hard to time as scalpers. We end up taking entry, and we end up seeing price come up here. We go risk-free on this trade, go break-even stops. As you see me mention here, right, I say I am long. And then we end up seeing price furthermore essentially come back down, and we go break-even on this trade. So about 4 hours of me live trading today, and we end up seeing a -1 on the day. For most people, psychologically, they could get upset because of that. Oh, I traded, I was on live, or I was doing this for 4 hours. I was working for 4 hours and I made no money. I actually indeed ended up losing money. I lost $35,000 today, right? But here's the thing. It's trading. It happens. There's going to be days, as we've done had live reviews before explaining where we've made much more in a lot less time. What you do in trading is you get paid for the decisions that you make in the stock market. What we ended up doing today is consciously make a decision to enter trading conditions that were not the best. And we ended up paying for it. Our first losing session in quite some time has to be like almost, if I had to assume, like within 3 weeks. And that's because we were just less patient than we've been the past couple of weeks. So that's pretty much that. Hope this review helps. And if there's one thing I want you guys to take away from this, price trumps all and follow price. Hopefully you guys enjoyed this recap. I'm going to catch you guys in the next one.